daily gold fix, October 17th, 2018. First, a quick note. As an Italian American, I am outraged at this picture, and I'm going to lobby my congressman. This is just ridiculous. I can't believe this sort of humor is allowed to happen to my people. But all kidding aside, it's pretty funny, actually. All right. So why don't we get right to the metals? We're going to be a little bit different today than we have been the last couple of days. I was trying to establish a trend of putting a post up to make it easier for everyone to read. But I thought, given the heavy schedule and the lighter crew today, we could review in all our cynicism or my cynicism and as a trader reading a Bloomberg article about gold. Before we do that, let's go through the markets, what they're doing, and then I'll give some opinions on why they're doing what they're doing. And we can go from there and add data today. So we'll start with the markets. The dollar is stronger and gold is up a little bit. Gold was down. Gold is now up a little bit. We'll get to the gold numbers in a second. That's gold. This gold here, the word gold, that's spot. Silver is up a little bit as well, mildly. The white metals, palladium and platinum, or the PGMs, platinum group metals, are down a little bit. Copper is up slightly. Looking at the driving currencies within the dollar, the yuan is a little bit higher. That means it's a little bit weaker. That is not bullish for gold, normally speaking. But right now, there's other things going on. Dollar yen, the yen is flat after coming off pretty aggressively last couple sessions. The euro had a big expiration yesterday of an option that we alerted everyone to, and it was a tradable product yesterday for active traders, and I think people should have traded it. We did not. We'll go through our trade yesterday, but the euro had an option expiring at 115 and a half, or 115.5, or 1.1550 of approximately 1.3 billion euros yesterday. And the euro, if you look at it on an hourly basis, yesterday, the euro, and this is very relevant. Yesterday, the euro had a spike during 9 a.m. time. If you're an options guy, you're probably looking at that saying, "Oh, that's probably the market getting away from the strike and someone hedging gamma." Could be true. Can't prove yourself wrong. But you had some nice hourly ranges yesterday, starting at 9 a.m. So you had basically this is I think this is all option related, and then you had an expiration. And now the market is through that strike. Serious move and in the euro this morning. Remember, currencies are not supposed to be as volatile as other markets, but the euro is the loser today. I'm sure the headline will be, if it hasn't been already, something about Brexit, Italy, etc. If you're interested in Brexit and you want to find out what's going on, what's been going on, because let's face it, Brexit fatigue. In headlines, I don't even read the stories anymore, but we did put up a story yesterday from Bannock. I'm not even sure how to say the name, but I know Mark Chandler as an excellent Forex person, giving a primer or an update on Brexit in basically 1,000 words. He tells you what's happening, what could happen, and what the likely paths are. We'll put that up actually if we can. But again, the euro is weaker today. If gold is up and the dollar is up, think of it like the Brexit play. Britain's going to sink into the ocean. Let's buy something that's not denominated in British pounds. Let's buy something that's not denominated in euros. Let's buy dollars and let's buy gold. That's not something that I am advising, but there you have it. Think of it that way. It's a muted version of that. And there you have it. The British pound is making the euro look good. Larry's not here, so I'll say it for him. Where's the British pound? It's trading 131. Okay, it's a lot softer, but still it has a 130 handle, so why do we care? But it is down over 0.5%. So this is Brexit related, and Without even looking, the British pound is down. Active traders, we look at the news, we read the news. We're more interested in how the market reacts to the news, if anything. And absent a newspaper, if the only thing you have in front of you is the National Enquirer, I'm looking at the British pound lower. I'm looking at the euro lower, and I'm saying, odds are it's a Brexit issue. I don't care. Can I trade it? We trade markets. We don't trade news, although we may trade news on markets. Does it move? I want to trade it if I'm an active trader. But macro and fundamentals. Um, Alan Hill writes for us, and he's on top of Brexit in a very fundamental, intimate way, uh, 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 and not just because he's a Brit, because he pays attention to the political aspects of it. But I digress again as usual. Okay, so the euro and the British pound. So why don't we just say there's problems with Brexit? We'll find out what they are later. We don't need to. We read the tape. That is why the dollar is stronger and gold is not selling off. So there is some money flying into gold as a result, or perhaps, right? This is all opinion, perhaps related to Brexit. And need I remind you what happened when the last time that happened? Gold screamed higher and everybody was throwing money into gold. There was a big short squeeze in 2016 in gold as well as silver on the first announcement of Brexit. And then after a actually prolonged period of time where the dollar and gold were higher, those two don't usually move in unison for a long period of time, no matter the crisis. But when gold sold off, it was a disaster, uh, and a disaster it didn't recover from for 8 months, I think. We can look at a chart on that, or you can look at it. Excuse me, that's a little bit of coffee. All right, so why are the markets doing what they're doing? Well, before we get into the why, take a quick look at uh, global markets. Okay, Chinese stocks are up a little bit. That's because of their lending data. We'll touch on that in the AM roadmap. Um, stocks are down in Europe, which is consistent with a Brexit Europe crisis. So you have currencies and stocks moving in unison in Europe. Um, in the U.S., the S&P futures are called a little bit lower at this moment. I don't know where that is in terms of fair value, but it doesn't seem like much. We can take a quick look at that. Okay, so yeah, we're probably a little bit lower. Um, and why not? I mean, we only have what 2.5% rally yesterday. We're entitled to go down if we're going to go back up, and we'll touch on that. I think I have a very strong opinion on why the market rallied, and although that doesn't help you trading yesterday, it does help you. It does help me. Whether it helps you or not is entirely up to you. It helps me pay attention the next time things like tick data come out. A lot of uh, the market cares about flows into the U.S. That's all I'm going to say. Back to the markets. Okay, Brent is stronger, and WTI is off. So the Brent TI spread is widening, with the markets really going nowhere. That's interesting. I don't know why. It could be a roll off. It could be a fun roll. Um, Tracy and Bryn would be able to speak to that uh, more quickly than I can. I don't have the website in front of me. If they're questioning, let me see if I can get that up. Uh, yeah, there we go. All right, so I'm in the news Q&A. If anyone wants to uh, throw me a bone on why they think oil is doing what it's doing, that's fine. Okay, we saw the dollar, we saw the currencies. Okay, so here we go. What is going on with gold? We'll take another 2 minutes on that. And gold, Brexit, and China. Those are the three things I want to throw three bullets at you on how they're related today, as opposed to every other day. And then I want to go through a Bloomberg article. Uh, Before we do all that, why don't we just give you some gold numbers? Why don't we focus on the actual product we care about for a second? All right. All right. So here we go. All right. And all right. Numbers before we even get into looking at systems. All right, my numbers have changed a little bit, but not much. 1234, 1237 was an area of a dead zone. That's no longer 1234 is no longer on my radar. 1237 above that gets you some action. We're trading 1229 right now. and see those wicks above on the hourly, that's not good. I just looking at that and having no other information, I'm bearish. Below 1226, I think we get some acceleration lower. 1221, if you remember, that was the 1220.70 level, was at the top, was the last high before we struggled for a couple months to get through the teens. And now I would see that as some sort of significant support area. 1220 area, 1221 area. The teens, I'm not even going to give you a number in there. I don't care what it does in the teens, it won't end there. So that puts me at 1212. 1207, 1201, 1193, 95, 1189, and 0, facetiously speaking. All right, so let's look at the possible trades today, starting with the hourly. All right, we're going to go bottom up today. All right, nothing is on my radar for the system that I trade. So I have nothing to offer on the hourly, which we'll go a little bit further out. We'll go to the 4-hour. See if we have anything getting ready there. Okay, the 4-hour, 240-minute is getting ready. By getting ready, I mean it's on my radar. I have no alert and no trigger yet, but it is now on my radar. I'll give you a little clue if it helps to understand a little bit why I come to these conclusions, even though I'm not going to tell you everything. If you look at the bottom, you see HV5 and you see HV20. I put those on the same chart. When HV5, that's historical vol, gets to be 50% or less of historical vol 20, so I look at it as a regression to the mean oscillator. When 5-day vol, right, not implied, when 5-day realized vol gets to be less than 50% at or less than 50% of 20-day vol, I picked 20 because Bollinger Bands work on a 20-day basis, then it's I'm ready for an alert. There are other factors related to historical vol relation to implied vol and some other things that I'm not going to divulge. But I want you to understand a little bit better what we're looking at here. What we are looking at is in the days before, right, our scale is messed up here. But if you look on this time frame, right, you've got historical vol is 3.3 to 5.1. That's not 50%. So what I would expect based on previous observations is that the Bollinger Bands here on the 4-hour chart are tightening. I would expect another pinch as the term goes. And then I would, if things go to plan, before we get a signal, we'll get a pinch in the Bollinger Bands. The 5-day vol will go to less than 50% of the 20-day vol in a bar before the actual signal comes. So we're closer now than we were 4 hours ago, if you see what I mean there. And then when those things happen and all the other things that I'm not, that aren't on this chart have happened that go into the algo, you now have levels. You can fade them or you can run with them. And let's say we had a signal right now, which we don't. It would say a 4-hour close above 1234.13 is a buy. A 4-hour close below 1222.60 is a sell. Frequently, you'll get stopped out on these, but you have very tight stops. The problem with them is when the market doesn't do what it's supposed to do, either stop you out or make you money, and it goes sideways, what should you do? Well, what you should do is you should get out. So by that, I mean, this system says, let's say we broke 1222.60 and the 4-hour chart closed. All right, so we're short. We have a stop. The stop is tight, but the market goes sideways. What do? Well, this is a volatility system. It's not a technical system. It adds the concept of time to it, like owning options. Optimized 3 to 5 bars. If the market doesn't do what your signal says it should do in 3 to 5 bars, that is stop you out or move violently in your direction, you get out. So there's an expiration on these signals. So 3 to 5 bars is the expiration. It's 8:14. I'm lingering on this. There have been questions in the chat about it, so I'm lingering on it a little bit longer than usual. I would look for another pinch and the 5-day to get the 50% of the 20-day before this goes from being on my radar to being an alert. And it doesn't mean I have to get this before the market moves. The market moves when it wants to move. I just won't get a signal to participate because I won't get my risk reward. Got it? I hope you got it, because just because I get a signal that says sell it, and then the market doesn't go down on my signal, and then it goes down 2 hours later, and I've been stopped out, doesn't mean the signal's wrong. Just means the market doesn't care, and it's going to go anyway. We were dealing with risk reward here. Okay, enough on lecturing on how much I know. Let's look at the daily. If there's any clue there, a lot of lines here. The lines are the Bollinger Bands don't matter. My system doesn't matter on the daily. It doesn't really give me anything. Well, it does matter if you look at a regression play. Look at those white lines that I drew. I don't know. I think I drew them one yesterday and one last week. We are. I like them because the market. I like the one that the market had been piercing. This one here. I like lines that have violations. This is not a daily line. I think this is an hourly or 4 hour line that I superimposed on the daily, and we're below that. So if you're a technical guy and you look at that line, that top line there, and you see that number of, it doesn't render here, but we're talking about like 1230, I don't know, 1237 ish, which coincides with my number from a previous volatility signal. You know what? You could be short here. If you look at the wicks, uh, I don't see this. Some people would call this a bull flag. I do not. I do not, because it's upwardly sloping. A bull flag for me has to be downwardly sloping, like a 2 steps forward, 1 step back thing. All right. So there you have on the charts. Let's go to some notes. There's my alien. Actually, let's go to Michael Moore stuff. Uh, Here you go. Let's see what he has. He wrote this from a lower call. This is before the bounce. The guy gets up at 3 in the morning to start writing these, and he's not done writing until 9 a.m. When his energy stuff is out. Okay. Uh, Nothing really stands out in his numbers. Some coincide, some do not. But the numbers for this specific technician uh, in isolation don't help you much. And that's not because they're not good. It's because context matters if you're dealing with a real technician. So what he says is what stands out to me in a quick look. I've looked a couple times, but trade above 1235.97, 35,960 to 690 is a sign of strength on a day. Okay, great. So 1237 is a number for me, right? So I'm going to say above 1237. We're going to see some action. I think I've already said that. So, and then he says we'll test for higher exhaustion levels up there. Look for possible exhaustion in 1254 area. All right, we're giving you higher numbers. I'm looking at this market as if I'm going to do anything today, I'm going to sell a rally. And you know what? I don't sell rallies. I sell weakness. I buy strength. Uh, there's many ways to skin a cat. So looking at the downside, since we are in the 1220s, trade above 1229.31 is a sign of intraday strength. Okay, so if we don't get above 31 and stabilize above there, that reinforces my bearish bias. We were actually $5.20 lower. It's 8:18. I have 3 minutes. I want to go through something quickly with you. I recommend, if you're reading this, if you're listening to this, if you trade gold, I recommend. Where did that go? All right. I have notes that I wanted to. No, that stinks. The Bloomberg article is gone. Okay. Well, that's a bummer. So there's a Bloomberg article out on gold today. All right. And I think I did take one picture of it in case I did something foolish like that. And where is it? All right. Here's the first. I took a picture of a snapshot just so we'd have something to look at. There's a Bloomberg article out today. If you Google charts, oh God, what is it? Gold short covering rally. But the article, after you get through the ads, basically starts out with inflation will drive gold prices later in 2019, says fat profits Lennox. This article is not really friendly to gold, as the headline itself was more negative on hedge funds than a positive on gold. And it talks about God, I wish I had that. I want to get that up. That's just too important to not have. Um, all right. Mm, mm, mm. Here you go. Hedge funds reeling from gold rally. Gotta love it. Not gold is rallying, not buy gold, not, I'm not saying that they should say that, but please don't tell us to buy things because they're up. They certainly don't tell us to do that with gold. Now, this has ads in it. All right. If you use Mozilla Firefox or are on an iOS system phone, you hit that there and it removes your ads. Okay. Let's go through this because they're saying things that we've been saying for a week or two now in a much more digestible way. But you know what? If you're a beginner, you should read this in the context of what we've been saying. Okay. So rally, blah blah blah, shiny metal. This is a begrudgingly nice article about gold. Here's the bullish case with one big fat caveat: hedge fund shorts raised prospect of a short squeeze. No kidding. We knew that. But sarcasm aside, what they're referring to is the fact that shorts piled in on the last night of traders right before the rally. And I said, we talked about that yesterday, the why. That's over and done with. Okay, number two, there's shifting sentiment. Okay, big deal. That's a chart. It shows contrast. The 100-day moving average is important to many people. I don't disagree with that. It's not important to me. Breaking free. Gold gets new drivers as the dollar releases grip. Yes, the dollar is not releasing its grip. It's different pairings that matter more. Gold is reappreciating against many fiat currencies again after depreciating for the last 6 months against most currencies, except I guess if you live in Venezuela. That's not new. It's not breaking free from the dollar's grip. It's more tying itself to China. Okay, unwelcome rally. Rupees decline, Stokes Indian gold price, threatening demand. I want you to think about this. A paper currency is debased. Okay, here we go. Conspiracy theorists and people that are all about hard money. Here's some wood for your fire. Rupees decline. That is a fiat paper currency's weakness. Stokes Indian gold price, meaning because the rupee is weaker, there it's more expensive to buy gold, and the price of gold goes up in rupees. It may not be going up in dollars, but believe me, if you have inflation or debased currency, it goes up in your local currency. Which that's it. Okay, threatening demand. Here's the irony of it: in a country where a currency starts debasing, and I'm not saying India is doing this behavior right now, but in a country where currency starts debasing, where inflation starts accelerating, and it becomes more expensive to buy gold because your currency is cheaper, is weaker. People will buy more gold in that country for at least the first leg up in the inflation because they see the trend. So, yes, it threatens demand at some point, but gold is a giffen good. The higher it gets, the more people want it, just like options are. Gold is a giffen good. The lower it gets, the less people want it. In fact, I think stocks are giffen goods too, but we're not getting into that. All right. So remember, a weak currency may kill demand for fresh buying in gold. I agree. But it's also going to make people who have gold under their pillow or on their necks or in their safe deposit box a lot less likely to sell it. Keep that in mind. There you have it. So that's it for. I could do a lot more. Unfortunately, why don't we? I'll give you a little preview here. All right. I strongly recommend you read the following. If you're interested in gold as it relates to Brexit and why the markets are doing what they're doing today, read a post we put up yesterday called Brexit Frequently Asked Questions Straight Up No Noise. That's not our writing. That's Mark Chandler. Love his quick analysis, as I do love Alan Hill, who writes proprietary stuff and is almost, I would say, semi-exclusive to the Opportunistic Trader and does exclusive interviews with Michael when he is available. Overnight recap, I strongly recommend you read that. Here's some stories from yesterday. Carl Icahn and Dell. Exchanges are consolidating. This unsafe haven was put up as a hat tip to Larry. Um, uh, we're talking about bonds and equities, but it's 8:25. I'm going to call it a day for this, but I'm going to give you levels that we're looking at. I did trade gold yesterday, very small trade, like a 50 cent to a dollar winner. I ran out of patience, as is wont in gold. It was a buy signal that was short lived. I think I told you that. I also had more success trading Facebook, which might be a good example of the system, but certainly not one that I want to look at. Okay. Uh, I would consider being short gold below 1227. Nothing on this chart says to do that. It's just a number that matters to me. The hourly run up, I think, is running out of gas. Let's go to a 15-minute chart. Uh, okay. Uh, in fact, the 15-minute chart says that unless we get above 1231 and a half, we're apt to touch 1227. So 1227, I may get something, and that may be triggered, I'd say, a couple hours in on the day. If the Bollinger Bands on the 4 hour give me a signal. Other than that, trade the range if that's your style. I have nothing to do in gold and silver as well, even though I haven't put it up. So have a great day. 8:26 today. The two important data points coming out of the U.S. are housing starts, which we'll discuss in more detail in the 8 a.m., 8:30 a.m., 8:30 roadmap, AM roadmap, Larry's roadmap with Michael. And today at 2 p.m., if you're trading anything, at 2 p.m., the Fed minutes come out. We'll discuss this. The Fed minutes come out from their last meeting. If you could have knee-jerk reactions in the market if somebody interprets a change of a verb or a noun or an adverb, that could make the market move. Uh, I personally think today's notes will be a non-event, but just because I think it means non-event doesn't mean the rest of the world will not. 8:27. Have a great day. Good luck, and